Hey, good morning. This is Mayor Valensky with Driving Markets. Let's kick off. Okay, so the UK raised, or let's rephrase that. The mortgage lenders in the UK raised rates on the 5-year fixed above 6%. That is a serious rate, and that's going to cost homeowners a lot of money. Could impact seriously on the economy as more and more money or liquidity is sucked out of the pocket of the homeowner and of the general public, as not only is the cost of living rising, obviously the cost of mortgages and rents are rising also, and that is putting a downer overall on the economy. Not only the UK, also in the US, also in Europe, also in Israel, for example, the rents are going up. So you've got across the board globally rising rents and rising mortgage rates. How is that going to impact the property market? Well, what's likely to happen is as follows. Those homeowners who can't afford their mortgages will either sell, or if they're going to default, be repossessed, or they will leave the property and rent it out, making more properties available for rental. Therefore, you will see the rental market go down. The price of rents will drop over the next 12 to 18 months as more and more homeowners would leave their properties and rent them out, assuming that the property is not going to be repossessed or sold. So you've got one sector which is going to suffer, and the rental market is going to benefit as rents will go down over the next 12 to 18 months in the UK, in the US, Western Europe, and obviously places like Canada and any other place where rents are high. So those people who are looking to rent, that is good news. You'll have a better negotiating tool when you come to negotiate your rental contract. Moving on to equity markets. So you've got a particular share called Eco Petrol. I want to discuss that at the end of the tape. I'll give you some tips on opinion only at the end of the YouTube delivery, so you'll know that you've got something to look forward to. Let's move on. So equity markets were flat yesterday based on the 4th of July US Independence Day. Markets were closed in the US. European markets were very, very quiet. Where are markets going from here? Looks like up until towards the end of the year, equity markets will continue rising. That does not take away from my view that over the next 12 to 18 months, you will see a 25 to 35% drop in equity markets globally. Why? Because of liquidity issues, because of interest rates, and because of overall potential rising unemployment. However, up until the end of 2023, you will see equity markets continue to move forward. There's a lot of hype in the tech sector. The Nasdaq is being pulled up by two major shares, which is Apple and Microsoft. They form nearly 25% of the Nasdaq. The tech sector's got into a frenzy and a FOMO mood where everyone is buying tech, whatever the case may be, and a bubble is forming there. I've said over and over again, I want to be absolutely clear. A bubble is forming in the tech sector and it will pop. It's very similar to the dot-com crisis and the banking crisis of 2008. Talking about banking crisis, what you've got in the US is a rising regional banking crisis. They've got $1.4 trillion of loans that need to be redeemed by the end of the summer. Everyone has ignored on Wall Street the banks. And what's happened the banks have ignored the warnings from commercial property sector and the fact that these regional banks are going to fail. There's no doubt about it. Once the regional banks fail, why will they fail? Before we go into will they fail? They'll fail because there's going to be an increase in defaults and repossessions and landlords walking away from properties due to the fact they're simply too expensive to maintain. Whether it's on a buy-to-let commercial, any type of loan, the regional banks have been there loaning. Most of the loan market is regional banks in the US. And once those homeowners fail on their mortgage payments, the regional banks are going to be left with trillions of dollars of debt that they're unable to cover. As a result of that, there's going to be a banking crisis. Okay, be aware of that. The regional banks are going to go down. So I want to be absolutely clear, no doubt about it, for this channel regional banks are going to go down. That's going to impact the top tier banks. They're going to fall by about 15 to 20% in their valuations. And obviously that will have an impact on the rest of the market. I'm giving you an overall macro fundamental picture, not talking about individual analysis of particular shares. Now let's move on to something a little bit more that viewers are looking for which particular shares, which particular assets will move. So I've got a couple of them. Number one, we've got a Eco Petrol share, which is 80% owned by the state of Colombia. Look into it. It's going to move up. It's probably got another 16 to 20% move on Eco Petrol. Again, that is my opinion only. I'm not giving advice. I'm not giving any guidance, so I don't want to be sued for advisory. It's just something, in my opinion, you should look at. Also, Bitcoin. Now, Bitcoin has moved above the 30,000, rock solid 30,000, moved on to 31,000. It's likely to move up to the 35, 36,000 in the near future. Keep an eye on Bitcoin. In times of recession, which we will go into over the next 12 to 18 months, we're already in an unofficial recession as far as small businesses are concerned. Then look at gold. Gold is at $1,924 an ounce. Probably move up to the 2,000, 2,100 if there is any type of crisis or concerns out there. However, Bitcoin looks like a better bet because of the gambling instinct that a lot of traders have. It looks like a better bet for the short term. So those of you who are crypto traders or looking to get in, then maybe you should start accumulating a little bit of Bitcoin and put it aside, ready for that bounce and that growth. So that's more or less it. What we're going to do going forward is have a macro, a fundamental, look at overall where the market's going. Another one should look at, by the way, I've just recorded now, is the pound dollar cable, pound dollar. Pound looks like it's moving up. Remember, I quoted it at 122, 123, saying it's going to go up. I think it's going to go to 129, 130. It looks like it wants to get there. Rates are going up in the UK, so that is a big push behind the pound. So on those who are Forex traders, pound dollar looks like a good buy at this stage. That's it for now. Share, subscribe, comment. Happy to have any feedback whatsoever. Also offer a mentoring program if people need to be mentored, or you have any particular questions. You can always ask questions and send them on DM on Instagram. That's it for now. Catch you later.